Welcome to Taking the Leap into Commercial Real Estate, the #1 podcast dedicated to helping you get comfortable in the commercial real estate arena and equipping you with the latest market news, insights, and strategies you need to make informed decisions about investing. Now, let's get into today's episode with your hosts, Angel and Brittany Gonzalez.
All right, everyone. Thank you so much again for joining us on Taking a Leap in a Commercial Real Estate podcast. I'm your host, Angel Gonzalez. You got my co-host here, Brittany Gonzalez. And we have the pleasure of having Chris Lento here with us, who's going to give us a little bit of insight as to what they got going on, who he is, and really hopefully we can have a good time together today, just kind of learning a little bit about his journey. So right off the bat, I'm going to ask you, Chris, please introduce yourself and let us know a little bit about kind of what's your journey been like.
Yeah, thanks. I'm happy to be here, Angel and Brittany. So my name is Chris Lento. My company is EM Capital. We're a mid-market multifamily investment company. We focus on the southeastern U.S., so Carolinas down to northern Florida. Target properties like in the $10 to $50 million acquisition range. And I live in Boston, so some sort of a out-of-state investor for everything I own right now. I did start investing in Boston in the early 2000s, like shortly after I got out of college, and invested in smaller apartment complexes, sort of in parallel to my full-time job. And then probably 10 years ago, really got the itch to try to figure out how to switch this over to a full-time career, and learned some things along the way, and started this company 6 years ago. So yeah, it's been quite a journey. And when I started this company, we had 12 units under management, and now we have over 600.
Whoa, there's a big difference.
Yep. Yeah. So I was an aerospace engineer in my past life, and then don't do anything like aerospace engineering now.
I know Brittany's got to have a question, but I'm starting to laugh because I got to tell you, one of our partners is an engineer. And the more and more people I'm hearing that are in your dynamic place that have that your background, I always lean in more because I definitely know that your brains work a little different. So I'm itching to get into what exactly that's been like in that journey. But I'll let Brittany go ahead.
Well, I just appreciate you being able to even just let us know. And I say an out-of-state person, you invest in a place that you're not even familiar with. But I'm going to even take you back a little bit. So you said you got started in the early 2000s right out of college. You were starting to invest even while you were working. What drew you into this field? How did you get started? And what made you tackle that while you were doing other things?
Yeah, so like I said, graduated college with an engineering degree, started a job in Boston. Working for what turned out to be a defense contractor. I didn't really understand that at the time, but it was a defense contractor. I was young, So moved into so in Boston we have a lot of these complexes or apartments called 3-deckers. They're like three units stacked on top of each other. If you've ever seen any Boston movie, they're all over the place. Like half the cities, these 3-deckers. So I moved into an apartment. With 4 of my friends, and we're paying, $2,400 a month for a 4-bedroom. And I'm looking around like, who owns this place? There's 3 units here. Like, this guy's pulling in a ton of money every month. It's kind of a dump. Like, well, how does this work? Like, so just got interested. I met, I kind of introduced myself to him, who I'd never met, asked him how he bought it. He sort of kind of fell into it. He was an electrician who just right place, right time. And started reading books, and podcasts weren't a thing, and the internet wasn't really that useful for that kind of thing at the time. So started reading books, started reaching out to multifamily brokers, just started like educating myself, and then saved up, tapped my dad for a loan, and bought a 3-family with an in-law apartment in the basement, like a less expensive neighborhood. 2 years later, actually a year and a half later. And then, that kind of kicked it off. So I didn't know much. I just sort of jumped in, wasted a lot of time for my first broker. I probably saw like 50 apartments. Like everyone is like, you want to put an offer? I was like, nah, the numbers don't work.
The things you learn as you go through all those, you start to pay attention to what you like and what you don't like.
Absolutely. Absolutely.
Mhm.
So moved into the first one, fixed it up, moved into a couple of units in that building. And then 3 years later, bought one down the street and moved into that one and then started growing the portfolio from there. So it was really, I mean, I wasn't thinking this was a career. I was thinking this was like a smart way to make some passive income. I think I've lived rent free since I was about 23. So that was great. Um, and then, it wasn't until maybe 10 years into it that I started thinking, oh, like, how could I could you do this full time? Because the way I was doing it was, saving money and buying the next one. Well, that doesn't really leave much. It's not an income. It's not a job. It's truly an investment. So it never occurred to me early on, like, how would I make this my career?
Wow. So do you feel that between, and then this is where I guess my question to you when in regards to kind of skills and experiences, right? So like, what kind of experiences do you feel like that you've gathered from kind of your start point to kind of going on your own? And how has that kind of been building on itself as you see yourself in the future of your company?
So I think there's a couple of sort of fundamental things that I learned early on about when you're trying to do something that's non-standard. Because, most people get a job, right? And they just have their job and they don't buy apartment buildings when they're in their early 20s. I think telling people what your plan is really critical to kind of holding yourself accountable. So I'm like reading books and I'm like, hey, I have like my spreadsheet that I built out and my underwriting sheet. But it wasn't until I, said to my friends, like, I'm going to buy an apartment building in the next 2 years. So I told my parents, like, this is my plan, and they kind of looked at me funny and were like, all right, well, how's that going to work with your job? But so that, like, I don't know if I got that advice or just did it, but what it did was the next time I saw everyone, they're like, how's that coming? So you couldn't just kind of move on to the next thing without expecting people to follow up. So it gave you this sort of accountability outside of yourself. And I've noticed that with, throughout, starting my own company or going into new ventures, if you share your plans with people, it makes them real and it makes you much more likely to follow through with them.
Wow, that's a good point.
Well, I'm going to kind of jump around a little bit. So as you kind of mentioned it, you've had people that you've kind of impacted your life. Is there anybody in particular, I would say as a mentor that you've had along the way that you could elaborate on and that has really helped you to make some of the decisions that you've made?
I've had a number of like real estate related mentors and like work related mentors, but they've sort of been, I would say, sort of tactical, right? Like there's no like one person that has been kind of my person the whole time. It's sort of moved as my career has moved. But I would say that my father has been very influential kind of along the way, very supportive, very like, he was an engineer as well. So, he would say, all right, well, you have an idea. Like, let's look at the numbers, or I'll check it out for you. Or very, very interested, tangentially, didn't want to get involved, but willing to review things and support me along the way.
He was willing to let you take the risks and he was just going to let you keep going through it.
Exactly. But he never said like, that's a stupid idea. Like you should do this. He's just sort of, kind of trusted me to either make mistakes or figure things out on my own.
So one of the things you alluded to as you were kind of talking about the fact that where you invest, because quite frankly, the target area that you've identified so far, why did you pick those markets, and kind of tell me a little bit about your investment, how do you decided to kind of go down this path with these locations and areas?
Yeah. So, like I said, the beginning of my portfolio was in Boston. And as I sort of learned about syndication and, raising capital for deals and, the typical syndication flow has a cash flow component to it. And nothing in the Boston area that I could find would underwrite like that. Like it's a low cap rate environment. The housing stock in Boston is either like these small 3 units. There's a handful, low percentage at least, of kind of 5 to say 20 unit buildings. And there's not a lot of big apartment complexes that aren't like class A larger buildings. So it's just not the best market to do a syndication model. And then in parallel, I sort of like got this concept from, I think, a seminar or a book or, a mentor about, there's different markets that have different value propositions. So like a New York or a Boston is a low cap rate environment that has a higher kind of appreciation potential, but your cash flow is not that great. And then you have like, maybe a non-desirable market that has very low appreciation potential, but great cash flow. So that, you can sort of like try to find the markets you think are the Goldilocks markets, right? That have good cash flow and are transitioning into high appreciation. And that's the holy grail. So I decided to sort of test this out in the Boston area. There were some markets within about an hour and a half that kind of had somewhat comparable rents to Boston, but were less expensive. So I took a home equity line of credit on one of my properties, bought one about an hour away, and tested out this sort of kind of not in my backyard model. So I got a full-time property manager. I sort of said, so my plan was now, I had evaluated the Southeast and I like these certain markets. So I was like, Chris, this is going to be, you're going to pretend this property is in Florida. You're going to visit it once a quarter. You're going to, when there's a problem, you're not going to drive an hour up there and fix it. You're going to rely on the property manager to send you pictures, and you're going to get on the phone. And that's what I did. And it worked out very well. And there was a lot of side benefits in that I didn't feel that urge to go like solve the problem myself, like I had done in my small portfolio that I was self-managing. It sort of gave me the freedom to say, all right, figure it out. Do you need, any advice on who to hire, or actually you do that and I'll approve it. So I sort of switched from being the property manager to being the asset manager. Wow. And that went well. So I transferred 1031 exchange that into a property in Tallahassee and tested that out for kind of real. And it was great. It was better than I expected. So that gave me the confidence to start bringing investors in and to execute this sort of out-of-state model. And then the second part of your question is, why do I choose those markets? Yeah. I mean, I'm looking for population and job growth, right? Like you can find a good deal anywhere, but if the tide's, you're with the tide, I think you have an advantage.
Oh, yeah. Yeah. No reason to create your own headwinds, right?
Right. Exactly.
Well, I think you alluded to some of the key factors that you look when you make a successful investment, right? You want to make sure you get the right returns. You want to look through and ensure that you're setting yourself up in the right locations. If you had to share or tell like our audience what skills or experience you feel are essential or critical for success in this industry, what would you say those are?
Well, probably critical is to, find either be the right person or find the right people to do all the key components of the job, right? So you don't have to do everything, but you have to make sure that you have people that you trust to do all the key things. So you have to be able to evaluate the investment. You need to know the numbers, figure out what your assumptions are. I mean, there's certain things that are known, and then when you're doing your underwriting, there's some key numbers or values that are assumptions. You have to be able to justify those assumptions to make sure everything hangs together. I think you have to really understand your market. So, what are the macro kind of trends in your market, like population growth and job growth, but also what are the sort of the neighborhood, what's happening with crime. So you have to be a kind of a diligent researcher. And I think that it's running my own properties, I think gave me an advantage of, I sort of know what boots on the ground to expect. So I can go and kind of tour a property, and I mean, I'm still going to get, an inspection and go get all the third-party reports, but they're pretty consistent with what I already kind of knew just being there for half a day.
So I'm going to ask another question, but how'd you learn all this stuff? Like, how'd you put yourself in the right places to find the right people to support you? I mean, if you're doing engineering and then you're like, okay, I decided to do one of my own properties, but how did you surround yourself with the right people to help give you the education so you're making the right decisions moving forward?
I think it was trial and error, right? Like, you start doing it, you realize you're terrible at this, ask around for help, you find someone not that great, they don't work, you find someone great, you're like, oh, wow, okay, now I know that I need this kind of person or this person to help me in this area. So I wouldn't say it was a kind of a master plan. It was just like, this is where I want to go. I want to buy this apartment complex and make it work. And then as I hit problems, I kind of identified what needed to be done and either learned it myself or found out who knows how to do it and worked with them on it.
That's that. I find that to be intriguing because in some ways I feel like I've heard multiple ways that people have sliced this multifamily sector with regards to investments and things and scalability. Where I've seen people where they just attach to someone and they kind of groom them all the way through, and then people that have kind of picked their way and choose certain things. And the one thing that I found it interesting where people are not kind of like handheld and walk through it is kind of the ownership of all the areas that you get to learn and identify and so forth. So I feel like you're shoring up your skills at the same time while doing it, which I definitely commend. But I also was going to ask, I'm going to have to ask, like, have you realized that during this journey, you've had any real headwinds that you faced or setbacks that may have been unforeseen that has now been information that you've taken in that are hopefully going to help you going forward?
Oh yeah. I mean, constantly. And I would have loved to find that mentor. I mean, I was looking for like that mentor that was going to be like, come along, son, this is how you do it. You know, like that was the plan. It just didn't happen. I don't know. I've worked with a lot of great people. But like I said, there's never some Sam Zell out there that I was his best friend. So I would say like a good one is property management. So I've owned properties from 3 units to 145 units. And, the solutions for those properties are very different. So like a small, say 1 to 5 unit property, the management of that is very different from say maybe 5 unit up to 60 unit, 50, 60 unit. And then above that is very different. And I've had some serious problems managing these sort of 40 to 60 unit properties that are not big enough to support an on-site leasing agent and an on-site handyman. So they have, like they call it off-site model, right? So they lease it from the central office. And I'm talking third-party management. So professionals that I hire, they lease it from their office and they send out either their handyman or they contract plumbers or, vendors as needed to deal with problems that come up. And I've had extremely bad experiences in that respect. And I've learned a lot of lessons about how to find them, how to hire them, how to monitor property managers to make sure that they're doing what they say they're going to be doing.
Okay.
And I would say like you might learn some of this stuff a little quicker if you were on boots on the ground. But I think a lot of it, being remote has not, I don't think, hurt me in that respect. It's more just learning how to hire the right people and monitor them correctly.
Are you using like technology for that kind of stuff, or is it more so just the human element? Like what's kind of helping you be able to kind of be more efficient at those things?
Yeah, I mean, I think building processes where we're double checking things they're doing, or just coming up with those key metrics that you're constantly following up on. So like, lease trade outs, renewal trade outs. We use property management software for all our properties, like Yardi or AppFolio or things like that gives you insight into the numbers. And then, checking what they're doing on a regular basis. We do our own market surveys, so rent surveys quarterly. So we have the property managers do them and then we independently do them. And then we sort of check to make sure that they're doing their job and giving us up-to-date information. I would say, technology, yeah, we add, a fair amount of technology as it comes in. We're using some AI leasing software right now on 3 of our properties, checking it out, which just gives, prospective residences like quick responses to questions and information. And that's actually proving to be a big value add. But that's I think nibbling around the edges. I think the real key is just to learn how to spot good companies, good people, keep your eye out for the clues that they're not engaged or not aligned with your interests. So not that different from any other industry, really.
So how do you vet, like when you need a new project, property management organization? Do you feel like there's like a question or a qualifier that you're like, this is what you must have in order for me to be a partner and in order for me to take you on? Like, what would be like one of the questions that you ask that you feel like helps validate that you're making a sound decision?
Well, they certainly need to have extensive experience in a product nearly exact to what I have. Okay. So if they do condos and single families, I'm not interested in having them manage my 30-unit property. And there's a lot, there's a lot of people that are like, oh yeah, we're moving into that space, or we have some, or okay, well, let me know, give me the contact information of the owner of the 30 unit that you have, and let me talk to him about how his experience is, or her. So certainly direct experience in like a nearly identical product, and then references, like a number of references, and you can usually triangulate. So I have broker relationships in all these markets, so you can go to the brokers. Who's managing the deals that you're seeing? Who's doing a good job? Who's doing a bad job? So they want you to buy deals from them. So they're not going to give you names of crappy property managers, because then you're going to hire them and be like, hey, you gave me a bad reference. So sort of triangulate, then, maybe ask your lender, who do you see in a lot of who do you see managing a lot of the properties that you're getting loans on? So you can kind of figure out who the major players are in the market, just sort of by other references and resources. And then once you hone in on the final ones, get recommendations or get references that you can then go check on.
Okay. It's interesting. As much as we've done podcasts and people, you're one of the only people that talked about using the brokers as references for property management. Like, it's something I actually just sat here and I was like, we've talked about brokers for all things except that. I don't know why. So that's a new approach. So I appreciate you sharing that, because like I said, it's not been something I've been hearing at all.
They're actually great references because they see all the financials, every deal they list. So literally, they look at the T12 and if it's a mess, they're like, what is this property manager doing? Like,
right. Wow. As I'm hearing more about like your journey and your story and kind of the doors you're at, have you had some growing pains that you feel like could have been avoided, or growing pains that have really propelled you, or you feel are going to help you to propel into the future of what's coming? Because I got to say, going from 12 to where you're at, that's not a small number, man. That's actually quite a jump. So can you elaborate a little bit more on that?
Yeah, I mean, I think the reason I was able to scale at that pace was sort of strategic partnerships. Okay. So, my company is 4 people, but we partner on a lot of our deals with other sponsors to jointly take down the bigger deals. So we'll sort of split up the asset management. Asset management sort of something I focus on, and I raise capital and I source deals. But I partner with other groups to do some of the capital raising, support me in the asset management. Source deals, and that allows a small company to sort of, first of all, be able to bounce ideas off other people that you trust if you have these strategic partnerships, and then also take bigger properties down. And I mean, hands down, the on-site property management model that has a quality property management company running your property that has a leasing agent on site and a handyman on site is much, much easier to manage than the smaller stuff. And especially, effort per dollar. It's a no-brainer, right? So maybe I couldn't take a $26 million property down like I did about a year ago by myself, but partnering with another group, we did that. And then we, kind of learned from each other and used each other as resources. So that was the key to scaling, certainly, is finding other people to work with. Grow together. So I couldn't recommend that, more. Find other groups that you kind of have good synergy with, and then you energize each other to move forward.
I like it. What do you see as the future of your industry? What opportunities or challenges do you see that could lie ahead?
That's a good question. So, I mainly talked about kind of management today, but on the equity raise side and on the acquisition side, I can see huge transitions coming, right? I mean, the model of the brokers being the keys to the kingdom, I have to imagine at some point in the future, there's going to be more of an online marketplace, like the Crexes and the LoopNets of the world, which for multifamily right now are not really where you go to find good deals. They're sort of where you go to find deals that just won't sell, or they're like I don't know. It's a kind of a weird space,
right?
But it seems like it's to buyers and sellers' benefit to have a larger, broader marketplace, maybe nationwide, maybe regional. So I think that's going to change at some point. And then on the funding side, I mean, it really hasn't been that long where you were able to syndicate deals under 506B. And then it hasn't been that much longer since you could advertise those syndicated deals.
Right.
And now there's these crowdfunding sites, which it seems to me there's a kind of a big gap between 506C syndicated deal that you can advertise and like these fundraisers where you can buy, for $2,000, you can buy a piece of a property. So I think that gap's probably going to close in some form, and that there'll be a lot broader market to be able to invest in not just multifamily, but real estate in general. So how do I get involved in that? I'm trying to figure that out. Right?
and this is just more curiosity, but do you feel like in the future, like, are you as a company, like, are you guys thinking like, do you have a target in mind, or do you guys think like, hey, you're just kind of playing it by ear, or is it something where you're like, man, I really hope I can double every year? Like, what's kind of your time horizon for your firm?
Yeah, so we did have a target in mind, and then 2023 came along, right? We did $60 million in acquisitions in 2022, and we had targeted 100 in 2023. And then, the interest rates rose at historical levels, and everyone was afraid, and buyers and sellers weren't aligned, so that was out the window. And I kind of like rethought about that concept of growth targets, especially in real estate, because it's so cyclical.
Right.
So now, I certainly want to grow. And we're also, as I mentioned, before the call, talking about expanding into industrial. So we're looking into that as kind of an alternate asset class, just to, kind of keep growing. And that was always my plan, right? To grow the multifamily and become an expert at it, and then add another asset class and kind of become an expert at that, and then sort of grow, kind of figure out whether I wanted to move to another one after that, or what's the right size to maintain that balance of expertise and scale.
So I'm going to go ahead and throw it out there, Chris, because right there is something not, again, normal that I hear. Most people do not go multifamily and then think industrial. Okay. So coming from our background, like we talked a little bit off before, was the fact that we went from office into industrial. And the reason we thought that parallel and that shift was important was because we understood that, okay, we're dealing with the gross rate environment when it comes to rents, but it's a little bit, some offices have triple nets involved in there. There's a lot of the same kind of package and sequence a little bit when it comes to the language.
Yep.
Multifamily does not speak the same language as industrial, almost like at all. And so now, don't get me wrong, the strategies that you've used and that you kind of mentioned so far do align, but why industrial, and how are you looking to essentially take that and kind of grow your firm from that standpoint, if I may ask?
Yeah, so a couple of reasons. So the demand for multifamily is straightforward. I mean, the reason I started in multifamily, because it's easy to understand.
Right.
To investors, to people that are just starting, right? Like, you live in an apartment building, someone owns it. They pay rent. It's not that hard to grasp. So right. I think it's also easy to. So therefore, I think a lot of people are interested in it, and I think it's relatively easy to explain to investors how it works. It's not a very complicated concept, and because of that, it's got a lot of people involved in it. It's I don't want to say it's a saturated market, but it is a well participated in market.
You're generous.
Yeah, right. So it's a little bit more becoming, every year more difficult to find, high quality properties to buy at a good price, just because there's so much competition. And, the competition that doesn't know what they're doing kind of weeds itself out. But the group that does know is continually growing. And I see industrial as, you don't hear about it much. And I know there's tons of people out there investing in industrial, but try to find an industrial podcast. I think there might be one. I mean, it's really, it's kind of below the radar. So I think there's opportunity to enter a kind of a less competitive environment, possibly. And then I also think that, with the Inflation Reduction Act and the CHIPS Act and just the general what's going on in the world, we're pulling a lot of manufacturing back into the U.S. And I think the demand has already been good for industrial with transition to e-commerce, which drives a lot of warehouse space. And then all this kind of onshoring is going to drive industrial for the next 20 years. And that's the wave I want to be on.
Man, you are speaking sweet nothings to my ears. I have been sitting here. I'm like, oh my gosh, my guy, Chris. I literally put it in here. I'm like, industrial, my man. First time multifamily guy. I've heard that. you're now on my short list.
Well, yeah, we should talk. And then also, like almost like you said, it is the leases are more complicated. It's a little bit more in depth to understand. Each property is different, and I like that. I feel like that's kind of could be a competitive advantage.
It can, especially for someone like you that's an engineering background. I can tell you that I feel like in this space, if you understand problem solving, analytical thinking, strategic partnerships, all those things, you're only going to set yourself up for success in an industrial side. And so that's again one of the things that, as I'm hearing you talk, it just kind of rings to my ears like, this guy gets it. He's gonna go places, especially because industrial is an untapped market. It is and it's not, right? Like there has been over the last couple of years a big dynamic where you've seen people talk more about it, but more like a curiosity standpoint, not more from an execution standpoint.
Right.
And I think that's where opportunity lies. I think for us as a firm, when we look at the next 5 to 10 years, you said 20, but the people that understand in the next 5 to 10 years are going to have a huge advantage over the next group of people. And so that's where I feel like right now we're at as a market is when it comes to industrial. And I think that I commend you for seeing the foresight right so early on. So,
well, thanks.
Oh, I can see her. She is ready to come. So you better be ready with something good ready, Chris.
Well, I'm actually going to change the script a little bit. I'm going to ask you one of our company's questions, I would say. And so our motto here is faith, family, and giving. These are 3 things that strongly resonate with all of us on our team. Can you share the impact of one of these areas in your life?
Sure. So I'm on the board of directors for a human services company in Massachusetts, a non-for-profit called Bay Cove. And my sister has developmental disabilities, and Bay Cove has run the program that she goes to sort of every day for the past 25 years now. And
wow.
And it's been a great company. They do all sorts of developmental disabilities. They do addiction services. They do adult care. They do early intervention for kids. And it's been just really eye-opening to be kind of involved in that company and seeing their challenges and working with or not really working with, but being on the board and hearing the stories of the people that just care so much about other people. And it's been kind of really eye-opening to see that how many people really do care out there and every day get up and try to really make the world better in a true way, like a hands-on way. So that's been a very big impact on me.
That's awesome. And being able to have a place that's close and dear to your heart because of whether it's your individual family or just somebody, I think that definitely helps us always to continue to give back and to open the eyes of others that may not be so close to something like that. So I appreciate you sharing that.
Yeah, and Chris, I'll even go for a little bit further on that too. Please feel free to, after this too, if you have an opportunity, if you don't mind sharing that company's information with us via email, whatever, because one of the things we're looking to target in the near future is really focusing on companies or people that are having impact in the world and their communities. And it sounds like this is one of those organizations. And we love to support those type of deals and get more awareness to that. And that's going to be something we're going to be working on quite a bit in 24. So
yeah, absolutely. I'll email it over you.
No. Well, as we're kind of getting closer and closer towards our show winding down, I have a couple of questions for you. So the first question is going to be, if you had to recommend a book or a movie to our audience that have an impact on you or for any one way or a reason, what book or movie would it be and why?
Well, I'd say the latest book that I've been kind of quoting a lot or referencing a lot in the last couple of years has been Who Not How.
Okay.
By Dan Sullivan. It's a pretty popular book, but it's just a great concept, and it's so simple, but it just makes a huge difference in how you think about problems. Like when you encounter a problem, like as an engineer, the first thing I go to is like, oh, how do I solve this problem, right? And I'm moving my thinking around to be, who's the right person to solve this problem? And maybe it's me, but maybe there's someone who already knows it and loves this kind of problem. And I can work with them, partner with them, hire them to get it done faster. They'll love it, and then it's a win-win for everyone. So Who Not How I think is a great book to sort of help you expand your capabilities and focus on things that you're really good at.
Oh, love it. And then my second one, before we get into more about you and your company, is going to be, if there is one piece of advice or information that we have not covered, or something that you would want to impart upon our audience, what would that be with regards to kind of your experiences?
One piece of advice. I would say kind of listen to yourself and listen to your motivations. So, I was in aerospace for 17 years. And the reason that I transitioned, really transitioned to be my own employer, was because I took an emotional intelligence class. It was like an emotional intelligence leadership class through the company. And I thought it was great. And it was this whole area of like learning and, self-awareness that I was not exposed to. It was very kind of new territory to me. And it helped me understand why I was so frustrated with my career and my trajectory. And it came down to freedom. I didn't have freedom in my career path. I had to be in this building every day for a certain amount of time. I had pretty solid guardrails on what I could do in the role. I had very little impact. I worked for this giant project that had like an 80-year time frame. So I had very little impact into the direction or high level quality of this project. I had a lot of control of my project, but the bigger picture. And so understanding really what motivated me was this desire to have, freedom of time, freedom of purpose, freedom of relationships. Made me then realize, it's not just this career path that is not right for me. It's a corporate career path that's not right for me. So, really trying to figure out what's driving you, I think, is very important.
Oh man, that's beautiful. I can relate with that because my wife and I come from W-2 backgrounds, and I can tell you that entrepreneurship or passive income, it's not things that you get taught on a daily basis, right? That's not how the schools are built. That's not what they talk about when you're in high school, college, whatever. Right. And so hearing that we got three of us here that all come from that background and transitioning more towards this side of things, I think it's a beautiful thing. So I can definitely resonate with your message there. So. And I guess my final question would be, if an audience wants to partner with you, find you, learn more about what you guys are doing, how would they be able to do that?
You can message me on LinkedIn. It's Chris Lento. And you can find all my contact information on my website at emcapitalgroup.com. And then my email is chrislento@emcapitalgroup.com.
Oh man, Chris, I can't express how much we're grateful that you were able to share a little about your story. I laugh again about the engineering component. I'm thinking that Brittany and I just attract engineers now. Aerospace, I don't understand what's going on. I went from never talking to aerospace to here's aerospace in my life. I love it. But again, thank you so much for making time.
Thanks. I really appreciate it.
Hey, no problem. So I just want to make sure as we wrap up the show, Taking a Leap into Commercial Real Estate podcast, I want to thank our audience for taking the opportunity to hear out our today's journey. But I always like to leave with this in mind, is that as you continue to go on your journeys of whatever that may be in commercial real estate or other sectors, please really focus on building those relationships by going deep and not wide. You're going to find that you're going to get a lot out of them, and hopefully you get some mentoring from people like Chris in order to really get to where you want to go. So I just want to leave you guys with that. So thank you guys for joining us.
Thank you for joining us on the Taking the Leap into Commercial Real Estate podcast. If you enjoyed the show, please take a moment to support us by subscribing and leaving a positive rating and review on Apple Podcasts and Spotify. And remember, the views and content shared on this podcast do not reflect that of Keystone Private Capital. Thank you for tuning in, and we'll catch you in the next episode.